Welcome to Fundamentals of Accounting class. In this class, we are going to learn the concept of preparing final accounts. In financial accounting, the most important aspect is preparation of final accounts. This is the last phase of accounting cycle. Let us have a look. What are the objectives of this lesson? The learning objectives are: understand the concept of capital and revenue, understand the contents of final accounts, understand the need for preparation of final accounts, develop the skill of preparation of final accounts. With these objectives, we are discussing the most important aspects in financial accounting is preparation of final accounts. Now let us understand what are the accounts called final accounts. Final accounts comprises, simply we can say, profit and loss account and balance sheet. Preparation of final account varies with the nature of business, because in case of only the trading concerns, they are required to prepare only trading account, profit and loss account and the balance sheet. In case of the organizations which are engaging manufacturing activities, in such a case, we require to prepare under final accounts manufacturing account, trading account, profit and loss account, and finally the balance sheet. See, before going to that final accounts, let us try to understand why we require to prepare final accounts. Any business, their main activity is to generate profit or earn profit. That is a solo aim of the business organization. Every business form, irrespective of the size, tries to achieve the objective of profit earning. So that every business houses, irrespective of its nature of business, is interested to know the financial results. Naturally. So that to know the financial results, they are required to prepare final accounts. This is one of the reasons. Not only this reason, there are so many stakeholders to know the financial results of the particular business organizations, like creditors, lenders, employees, government, etc. These stakeholders also, they are required to know the financial results of the business unit. That is the reason why we require to prepare final accounts. So not only in these cases, and the government also would like to know the financial results of any kind of business organization from the tax point of view. We can say simply, final accounts is a last stage of accounting cycle. Now, final accounts we have seen already. If it is a normal case of business organization, without any production activity, only selling and only purchasing and selling activities are taken place, in such category of business, we need to prepare under final accounts, trading account, profit and loss account, balance sheet. If any organization is undertaking manufacturing activities, in such case, we require to prepare 4 under the head of final accounts. One is manufacturing account, trading account, profit and loss account, balance sheet. Now, just have a look once again. Final accounts, if it is a business concerns, sole proprietorship, partnership, companies, there are 3 types. Under sole proprietorship, trading firms, 3 accounts required to maintain, 3 things required to maintain. One is trading account, another one is profit and loss account and balance sheet. If it is a manufacturing trading firms, those firms should maintain manufacturing account, trading account, profit and loss account, finally the balance sheet. I'm coming to the next one. Why do we prepare final accounts? Simply we can have an idea. Financial results of one accounting period can be compared with that another period. If you want to know your performance, the business organization's performance, definitely we require to prepare final accounts. The financial health of a business unit can be assessed with the help of final accounts only. Where we are, what is our financial condition or financial position. If you want to know these kind of things, definitely we require to prepare final accounts. Final accounts communicate the financial results of a business unit to all its stakeholders. Preparation of final accounts is needed to fulfill the statutory requirement because we need to pay the tax on the earnings. So that as per the statutory requirement also, we require to prepare final accounts. Just have a glance. Objectives of final accounts. To ascertain profitability, we require to prepare profit and loss account. To know the financial position, we require to prepare balance sheet. In profit and loss account, we require to maintain 3 accounts. Manufacturing account, which is prepared to know the cost of goods manufactured. Trading account, which is prepared to know the gross profit or gross loss. Profit and loss account is prepared to know the net profit or net loss position. Balance sheet. Balance sheet is prepared for to know the types of assets and types of liabilities. For various reasons, we require to prepare final accounts. Final accounts are the base to measure the financial health of business concern. For preparing final accounts, we require to understand the concept of capital expenditure and the revenue expenditure. See, basically, we can divide the expenditure into broad categories. Those categories are capital expenditure and revenue expenditure, basing on the length of benefits derived from the expenditure. Benefits from an expenditure may last for more than one accounting period. Simply, we can say capital expenditure. If benefits from an expenditure may last within a year, we can say it's a revenue expenditure. In other words, expenditure made to generate revenue for a number of accounting years is known as capital expenditure. Whereas expenditure made to generate revenue in a particular accounting year is known as revenue expenditure. Capital expenditures are usually non-recurring, whereas revenue expenditures are recurring. Example, for capital expenditure, purchasing of machinery, it's a capital expenditure. Okay, payment of salaries, it's a revenue expenditure. Like here the division, capital expenditure and the revenue expenditure based on length of benefits derived from the expenditure. If the benefit is derived more than 1 year, we can say capital expenditure. If the benefit is derived from less than 1 year, we can say it is a revenue expenditure. All capital expenditure nature items should be presented in balance sheet. Revenue expenditure nature items are recorded in profit and loss account. In a similar way, capital receipts and the revenue receipts. Here also, receipts that take place in ordinary course of business. See, simply we can say revenue receipts. The receipts which arise out of the pure business activities, simply we can say a capital revenue receipts. The receipts which are not relating to the normal course of business transactions, those receipts are called capital receipts. For example, goods sold or services rendered by the business. Simply, it is purely relating to the business main activity. The revenue which is generated out of which goods sold, considered as a revenue receipt. Capital receipt. It is a non-recurring nature. These receipts are received at the time of sale of fixed assets or capital and loans, receipt of capital and receipt of loans. These receipts are called capital receipts. Capital receipts are recorded in balance sheet. Revenue receipts are recorded in profit and loss account. So these two things are most important for preparing final accounts. Now let us understand trading account preparation. For preparing trading account, we have a format. According to the format, we are required to prepare trading account. The debit side of the trading account relating to the trading direct expenses. So opening stock of finished goods, first item, second item, purchase of finished goods. If any returns are there, purchase returns, we need to deduct from that purchases and the cost of goods manufactured. And finally, credit side, sales we require to maintain. And is there any returns in that sale we require to subtract, and closing stock. And find the difference between credit totals and debit totals. In case is there any debit total is less than that balance amount is considered as a gross profit. If it is a vice versa, credit side is less, we can say it is a gross loss. Normally in cost of goods manufactured, we take all direct expenses, wages, factory expenses and all categories of expenditure relating to the factory we require to put here. See, this is the format of trading account. Once the trading account preparation is completed, then immediately we require to maintain continuously profit and loss account. See, whatever the gross profit or gross loss we have arrived in trading account, that should be transferred to profit and loss account. If it is a gross profit, that should be transferred to profit and loss account credit side. If it is a gross loss, that should be transferred to profit and loss account debit side. After that, we require to record all revenue expenditure in a systematical order debit side of the profit and loss account. Credit side of the profit and loss account, we require to record all revenue receipts. Just for example, salaries, office rents, rates, taxes, printing, stationery, telephone expenses, postage and telegram, discount allowed, insurance, audit fees, electricity charges, repairs and renewals, depreciation, advertisement, carriage outward, bad debts, provision for bad debts, selling, sales commission, bank charges, interest on loans, loss on sale of assets, like any other direct expenses, indirect expenses, we can say revenue expenditure, we need to present here. Credit side of the profit and loss account, normally revenue receipts, discount received, commission received, bank interest received, rent received, dividend on shares, interest earned on debentures, profit on sale of assets. Here also in a similar way, after recording all revenue receipts and revenue payments, we can say expenditure, find out the net balance. If the credit totals are more than the debit totals, then debit side balance amount will come. That balance amount is stated as a net profit. If debit side total is higher than the credit side total, then there is a balance will come in credit side. That balance is stated as a net loss. See, we need to go through the format carefully. Trading account format and the profit and loss account format. Finally, balance sheet. See, this is the balance sheet format. In balance sheet, left hand side liabilities, right hand side assets we require to present. Assets, normally we categorize fixed assets. Under fixed assets category, see, goodwill, land, buildings, plant and machinery, furniture, investments we require to present. Another category is current assets. Under current assets category, we are required to maintain closing stock, accrued income, prepared expenses, sundry debtors, bills receivable, cash at bank, cash in hand. So assets we require to maintain in two categories normally, fixed assets and current assets category. Fixed assets are long-term assets, current assets are for short-term assets. In liability side, we require to maintain first capital, capital opening balance, the profit earned during the year, net profit should be added to the opening balance of capital. In case net loss, we require to deduct from the capital. After that, is there any drawings by the owner we require to deduct. Then final figure we need to show outer column. And long-term liabilities. After that, we need to present long-term liabilities, loans and other aspects. Current liabilities after that. In current liabilities, sundry creditors, bills payable, outstanding expenses, bank overdraft, income received in advance. These are the items normally we need to present in balance sheet. See, once again, we will go back to the concepts, what we have learned so far in a quick reference mode. Okay. Introduction. Every business organization required to prepare final accounts because they need to know the financial results of the business organization simply. Not only that, to answer the stakeholders, we require to prepare final accounts. In addition to that, as a responsibility to pay the tax to the government, we require to prepare final accounts. Final accounts, if it is a normal trading concern, we require to prepare three: trading account, profit and loss account, balance sheet. If a business organization is engaged in manufacturing activity, come trading activity, in such a case, we require to prepare manufacturing account, trading account, profit and loss account, balance sheet. After that, we have learned why we require to prepare final accounts. After that, capital expenditure, revenue expenditure differences, capital revenue, capital receipts and revenue receipts differences we have learned. These four items are the most important items for preparing final accounts. Why? Because all capital nature items should be recorded in balance sheet. All revenue nature items should be presented in profit and loss account. Just once again, have a glance: trading account format, profit and loss account format, and finally the balance sheet. In this session, we have learned so far the basic concepts which are relating to final accounts. What is final accounts and why we require to prepare, and the concepts of capital and revenue expenditure, capital receipts and revenue receipts, and the formats relating to final accounts.